If you're borrowing money to buy a house, cash is still king. There is a lot of misunderstanding about how to prepare your cash when you're getting a mortgage and closing on a home. So I just want to dispel some of those myths and misunderstandings so that you can properly prepare those pennies before you get a mortgage, before you start counting down to possession day on a house. And these are actually some pretty critical steps that buyers need to take that can delay closing or cause problems in terms of securing funding from the lender when you're closing on a home. So the first one is your deposit. Now, this is something that you will work with when you're making an offer with your realtor on the property. And the deposit is really just good faith money, but it is often confused with down payment. But they are actually two different but related things. So for example, if you're offering on a home, you might say in the purchase contract you would like to put forward a deposit of $10,000. You write a check. That check is held in a trust account, usually at the listing brokerage, like a real estate brokerage. They hold that money in trust, and it's good faith money. Now, you can talk to your realtor about how deposits work, how you could potentially lose your deposit, but just know that generally 99% of offers to purchase include the buyer making a deposit. The seller doesn't hold the deposit. The listing office holds the deposit, usually. Now, down payment is a different thing. What you need to know as a buyer is that your deposit money is used toward your down payment. So deposit is not a down payment. The listing office holds your deposit, but they're not a lender, okay? So say you make a $10,000 deposit when you make the offer to purchase the house, but your down payment is the percent of the purchase price that the lender requires when they're approving the mortgage. So if you're a first-time home buyer, you might do 5% down. If you're a conventional borrower, you might do 20% down. Your deposit will be factored into that down payment. It's not over and above the down payment, but the down payment is a bigger chunk of money, okay? One thing a lot of folks don't know, and this is a very common challenge when we're getting final commitment for the mortgage, is we need to see 90 days history of where that down payment money came from. And that's due to really strict laws with the federal government that they impose on lenders regarding anti-terrorism and money laundering. So we're not saying you're a criminal, but we need to be able to trace that money for 90 days. So to make life easier when you're getting a mortgage, start staging that down payment money in a bank account somewhere so that we don't have to keep tracing it back to multiple accounts and sources in the 11th hour before possession day. The other thing that you need to know in terms of getting your cash ready for a closing is what's called cash to close. And a lot of lenders would like to see additional funds sitting in a bank account for up to 90 days to provide for closing costs such as legal fees and other charges that you're going to run up against. There's even property tax adjustments sometimes, depending on what time of year you're purchasing the home. So know that you're going to need additional cash to close over and above your deposit and down payment money. These are all things you can start preparing for in advance, even before you call me, a mortgage broker. Start organizing your cash in a bank account for all of these things. It will make things so much easier when we go to actually get you a mortgage, get a commitment from the lender, and fund on closing day with the lawyers. If you have any questions at all about how to prepare your cash for a mortgage and buying your dream home, just give me a call or shoot me a text, 403-382-7335, or you can look me up at karriflatla.com and we'll set up a call. In the meantime, have a terrific September long weekend, and we'll see you for next Friday Fire. Take care.